Germany's manufacturing recession continues. Let's have a look. Hello everyone, I'm Florian Heise and welcome to another episode of Heise Says. I've got my morning stein of coffee and I thought we'd have a look at this article about Germany's manufacturing recession. Because, well, Germany is one of the biggest economies on the planet, and understandably that will have trickle-on effects to other nations. So let's have a look. ASX to fall. European stocks fall as German manufacturing recession deepens. So before we go further into this article, let's jump over here and we'll have a look. This is from Trading Economics, and this is the Germany, shouldn't be German, or anyway, Germany's manufacturing PMI. Now, the PMI is a gauge that's used to measure, well, the state of a sector. And it's done usually very simply with a question, you know, like, is your work coming up in the next month or so the same as it was a month ago, or better, or worse? And, you know, that's just one example. They're trying to take quantitative information and then give it qualitative information, give it a quantitative measure. And what they're doing is, if you're below 50, they average out all the people they're asked. If you're below 50, that means most people are worse off than the last time they were asked, previous month. If it's above 50, most people, or the average, they are better off than the previous time they were asked. And if it's 50, it's neutral. So we can see here that Germany is very well below. And the range, what is the range? It's been, well, here's all the different aspects of it. But you can see, I think it was at 60 at one stage. We'll jump out to max and have a look. Well, there you go. Heading up towards 60 in 2018. Look at that decline. Look at that decline in just since 2018. What does that tell you? Oh, well, what's this decline here? What's that one? The GFC. So it gives us some insight into the manufacturing sector over there. So most of the people there are starting to feel it. And you've got to remember, depending on where you are in the economy, you know, where you're in the production chain, you'll feel certain things differently. Like, you know, a couple of years ago, it was starting to get a bit quiet for our practice. And then I was telling my mates and traders, going, no, we're busy. That's because as an architect, we will, you know, the design, the whole process takes, you know, even a couple of years before a job gets under construction. So I'll notice some changes a bit earlier than some of my mates on the trades. And now they're starting to feel it as well. So that's kind of why I'd like to get a PMI for the architectural profession, just to see what's on the drawing board. It's a project, we'll see. So this is Germany, Deutschland. Jawohl. And I think, you know, where have I got a family? Oh, I don't think anyone's left alive in Berlin anymore. We've got some Nuremberg, München. My mother's in Munich at the moment. Getting me a stein. I put an order in. So what we're having a look here is, you can see the economic complexity. It's 2.08. Okay, Australia, we're much worse. Their exports are second, and this is in 2017, so I think they'd be third now. 1.33 trillion. The imports are 1.08 trillion. GDP per capita is 50,000. It's all in US. You can see what they're exporting. Very different to Australia, isn't it? I mean, it's unfair to compare us to an advanced civilization. I mean, we're a colony. I mean, let's not pretend, guys. Let's not pretend. Okay, come on. We know it. It's all good. You know, colonial pride. So, you know, cars, vehicle parts. So if the manufacturing sector feels a slowdown, it's going to flow through all of these other parts of the economy. And here we go, all here as well. This is what they're importing. And this is their trade balance. We'll have a look at where the destinations of their exports are. Okay. France, you know, United Kingdom, Netherlands, so obviously a lot of Europe. Then China, Americas. There's Australia. There we go, we rank, we're on there. Oh, you can't see it because I'm in the way. But here, this is another thing we've got to understand. These are the countries, the origins of all of the imports into Germany. You can see here, I'm just checking to see my picture is in the way. Yep, so Netherlands. So it's going to affect all of Europe, it'll affect all of Asia. It won't affect us as much. I mean, what's our import value? 2.5 billion? It won't have as much of an impact on Australia. Yeah, we're 2.5. But you can see it's going to affect all of Europe, and then all of these countries, it'll just flow on. So a change in one country will have a ripple effect, a butterfly effect through all of the people that they're exporting to and all the people that they're importing from. So let's jump back here, and then that will eventually flow through to us here in Australia, particularly if it's, China. They're importing 10% of their product from China, so 109 billion, and we're pretty dependent, just a little bit dependent on China, aren't we, here in Australia? Just a tad. So Australian shares are expected to open lower after worse than expected economic figures added to investor worries over the unresolved US-China trade war effects on the world's economy. I haven't checked that out, but I have noticed that silver's gone up, so I'm using that as a barometer to see how everything else is going. So ASX futures were down 6 points, or 0.1%. The Australian dollar was steady at 67.7. European stocks finished in the red, with London's FTSE losing 0.3%, German DAX falling sharply by 1%. So European business activity slows down. Investor sentiment turns sour after the results of purchasing manager surveys, PMIs, across France, Germany and the Eurozone came in significantly below expectations. Okay, this is the concern, that it's below expectations. Overall, manufacturing in the Eurozone fell to a more than 6-year low, while services grew at its slowest pace in 8 months, according to data from IHS Markit's private survey. So you can see here, if the manufacturing sector is falling and now the services sector is growing at a slower pace, the slowdown in this sector will start to be felt in other sectors. In particular, German private sector activity shrank for the first time in 6.5 years, and its manufacturing recession deepened unexpectedly. Why is it unexpectedly? If the European Central Bank is pumping more and more into stimulus that's going to destroy confidence? Or are people just starting to wake up to this now? Are more people starting to wake up to it? Its flash reading of Germany's PMI, Purchasing Managers Index, came in at 49.1 in September, down from 51.7 in the previous month. What am I looking here? What's different to the one that I have? I've got one that's below 40. The German, okay, so, well, this is different to what I'm reading here on IHS Market German manufacturing PMI fell to 41.4 in September. And the article here is saying, oh, purchasing managers. Okay, this is a different one here. Purchasing managers. Okay. That'll flow on through to manufacturing. Different people, different group of people are asking. Sorry, guys. Any number below 50 indicates contraction, while a result above that threshold points to expansion. The manufacturing element was particularly weak, with a reading of 41.4, the lowest gauge of German factory sentiment since the global financial crisis more than a decade ago. Considering that Germany already contracted in the second quarter, today's numbers effectively increase the risk of another negative quarter in the third quarter, which by definition would constitute a technical recession, said Mario. Okay, I'm going to try this. Hadjariakos, investment analyst at XM. Oh, sorry, mate. Marios. I'll buy you a grappa. Am I getting that right? Is it a Greek name? It seemed that the malaise in manufacturing, owed to trade and Brexit worries, had started to spread to the much larger services sector as well. These downbeat survey results come less than 2 weeks after the European Central Bank cut its deposit rate to negative 0.5% and pledged indefinite stimulus, well, it is infinite anyway, indefinite stimulus to revive the 19 countries currency bloc struggling economies. Okay, so does that fill anyone with confidence? Are we living through a unique time in history when maybe the EU is coming to an end? It's an interesting experiment. Indefinite. When's the last time in history that nations debased their currency and just started producing more and more? That's never happened before, has it? No, it hasn't. So Apple's tariff reprieve. In New York, the Dow Jones Index rose by 0.1% to 26,958 points. The benchmark S&P 500 and tech-heavy Nasdaq indices closed largely unchanged. Investors have been cautious about progress in Sino-US trade talks after a Chinese agriculture delegation cancelled a visit to Montana. The news on Friday led to Wall Street's main indices posting their worst session in about 2 weeks. People are tentative and want to sit on the sidelines, said Michael O'Rourke, chief market strategist at Jones Trading. We're sitting here just below heights. There's no urgent need to chase them unless they break out, and of course no one wants to sell them either. Weakness across US markets was partially offset by the stock market gains of Apple, up 0.5%, okay? There you go, one company. The technology giant said on Monday that it would make a new Mac Pro desktop computers in Austin. Wow, hang on. So they're making computers in Austin, Texas, following some relief on tariffs by the US government. Wow. Well, there you go. US trade regulators on Friday approved 10 out of 15 requests for tariff exemptions filed by Apple, amid a broader reprieve on levies on computer parts. Apple's request for tariff exemptions were for components such as partially completed circuit boards. The new Mac Pro will include components designed, developed, and manufactured by more than a dozen American companies for distribution to US customers, Apple said in a statement. The move by US officials could make it easier for Apple to assemble devices in the United States by lowering the cost of importing parts. Well, they're still not manufacturing in the United States. They're just importing components. Well, that shows you. The US has lost all competitive advantage then in the manufacturing of these components, which is surprising considering, well, no, actually, no, not really. Honestly, a lot of them are still assembled by hand, aren't they? Anyway, guys, let me know what you think. Where do you think it's all heading? Are you worried? Do you think this will flow through to Australia? Let me know. Like, share, and subscribe, and I'll see you next time.